Welcome back, everyone. This is our gold market weekly review. My name is Angelos. I will be presenting this weekly gold market report. So I'm going to give 10 seconds for the risk warning and we'll make a start. And off we go. So, the gold market continues to keep traders fascinated, even though its price action for the past weeks has been mostly sideways. The idea that technically this movement can present opportunities for traders to set their positions is always imminent, while fundamentally we are in a rather interesting moment, with a number of important matters standing out. This report aims to overview the key drivers for gold's price, while at the end we will be closing with our gold technical analysis, which will assist us with important levels and possible price moving scenarios. So by examining gold's most notable daily movements in the past sessions, traders can be in a superior position to determine what the market tends to focus on and how the price action may be formed. In this case, and as expected during the previous week, gold's most active day was on the 13th of October when the US inflation data was released. In our previous report, we had included this event as a main focus for traders, as gold and inflation are usually strongly correlated. US CPI rates remained elevated while the monthly rate rose marginally. Gold's initial reaction was to move lower and in the next minutes rebounded higher and even surged to a new October high in the same session. On the same day, the FOMC meeting minutes released later in the US session confirmed the bank will start tapering its QE program this year and will finish in the middle of 2022. On the other hand, on the 15th of October, On the other hand, on the 15th of October, gold had performed its most notable downward movement in the US. On the other hand, on the 15th of October, gold had performed its most notable downward movement as the US benchmark 10-year Treasury yields recovered from a more than 1 week low hit during the previous day. The trend may have been intensified as the US retail sales for September stabilized instead of dropping as expected. Moreover, gold moved upwards upon release of the industrial production rate for September on Monday the 18th, but ended the day lower. From these pre-mentioned daily movements, we understand that gold traders tend to pay attention to the important US economic data and bond yield movements. In the following days, traders have an interesting economic calendar to trade with. On the 21st, we get the weekly initial jobless claims figure, the Philly Fed business index for October, and the existing home sales number for September. On the 22nd, we get the preliminary market services and manufacturing PMI figures for October. And in the next week, on the 26th, we get the consumer confidence for October and the new home sales units for September. On a separate note, the earnings season is up and running at the moment, probably enticing traders to move money into equities. Gold's price movement can be limited in this case, thus explaining the somewhat muted action in the past daily sessions. Furthermore, the USD is currently on the back foot since the past week, yet gold seems to maintain its own trading rhythm, not following the adverse correlation to the two instruments usually keep. And at the moment, analysts are keeping their eyes firmly on China. This is a different subject. China's economic performance has been questionable in the most recent quarter as its yearly GDP rate had dropped substantially to 4.9% compared to the previous figure of 7.9%. Analyst worries, however, can be perhaps beyond the economy at the moment as the mainland is dealing with a variety of other matters. For example, the government's attempt to control wealth distribution by setting rules to limit gains, and also the problematic power shortages and continued concerns about COVID-19 seem to weigh on consumer spending, even though gold responds to a risk-on sentiment and may react temporary or even momentary happenings. In the long term, the Chinese concerns have the potential of supporting the gold market. On a final note, two of the main focuses within the global economy at the moment, the high inflationary pressures from around the world along with the supply chain issues, are possibly to remain with us until the year's end, moving into 2022. However, the effects of the constraints above may become more evident in smaller economies and not only the largest, as was the case until now. In this case, the need for a more of economic protection is possibly to reinstate itself. And we move now to our gold technical analysis. Please note this is gold for our chart. Now, gold ended the previous week in green territory, while it is also positive so far in the current. At the moment, gold is trading between our R1 1800 resistance level and our S1 1750 support level. Since the start of October, the S1 1750 was tested constantly but was not breached, while the ceiling for the bulls has been our R1 1800 round number level, with the price action confirming these levels as rather solid. In case of a breach above the R1, we could be in for a ride to higher levels like the R2 1830, which is the highest level tested since early September. At the top, the R3 1860 represents our final resistance level and can be engaged in an intense bullish scenario. In the opposite direction, a selling momentum can force gold to the S1 initially, while the S2 1720 support can be reached just like it did in the last days of September, making it the monthly low level. Under our chart, the RSI indicator remains within the 70 and 30 range, possibly implying a sideways trend line. Since the start of September, gold's price action has been in a wider sideways motion between the R2 1830 resistance and the S2 1720 support. Thus, in our opinion, these levels can be used as targets. In the meantime, the R1 and the S1 can be used as a barometer for the strength of the trend. Finally, we tend to maintain a bias for a sideways motion for the metals trend line. And that's the end of this report. We hope you enjoyed it as well as found it useful. From everyone here at IronFX, wishes for solid trading.